Hello, everyone. Welcome to the Independent Opportunity. This is our home for tech, labor, and economic policy. And my name is Patrice Onwuka. I'm the director at the CEO, and it is tax day. I know it is your favorite day of the year after Christmas. We know. I guess tax day is either one of the best days or one of the most hated days for most Americans, especially if you owe Uncle Sam like I do. Uh, but not everyone loathes tax day. Some people are blessed enough to get tax refunds, or however you want to look at it. We'll talk about that. But those refunds could go to pay for bills, maybe catch up on those credit cards, put some money away for the summer vacation, or buy a big ticket item like a car or a refrigerator. So the problem is, though, right now we know inflation is running hot at 8.5%, and that's really cutting into most household budgets. And I actually think that tax day is probably more acute to most people this year than any other time in recent history because of inflation. So, in any case, we often hear these wild claims about taxes, about who pays taxes, and even crazier policies that kind of leave our head scratching. And so today we're going to spend some time debunking common myths about taxes, about the tax base, who pays taxes, and how much they actually pay. So, to help me today, I have pulled together a panel of experts to answer these questions. Joining me is Kimberly Pinter. She's a fellow with IWF. Isabel Morales, Policy Communication Specialist at Americans for Tax Reform. And Nan Swift, Fellow of Governance Program at R Street. Ladies, welcome to the CEO Policy Chat.
Thank you for having us.
Thank you.
Terrific. Well, guys, I'm going to give you just a quick go around the room. Tell us a little bit about who you are. I'll start with you, Nan. You're in the bottom right corner of my screen.
Well, thanks again for having us, Patrice. My name is Nan. I'm a fellow with the Governance Program at R Street Institute, where I work on congressional modernization, budget issues, and also a little ag and oversight and power of the purse. So I'm a professional complainer. I like to just rail against how frustrating so many of these systems are and reform them to work better for taxpayers. Previously, I was at the Senate Budget Committee, and before that at the National Taxpayers Union, who you'll be hearing more about for many, many years.
Terrific. Isabel, tell us about yourself.
Hi, like Patrice said, I am a policy communication specialist with Americans for Tax Reform. I primarily focus on taxes and budget, also healthcare and trade. I graduated from American University, studied economics, and also have previous experience in the House doing communications.
Terrific. And Kimberly?
Well, as you mentioned, I'm a fellow with the Independent Women's Forum. And I was most recently with the Treasury Department under the Trump administration as the Deputy Assistant Secretary for Legislative Affairs, Tax and Budget. I'm also an alum of Senator Cruz's office, the House Small Business Committee, and Senator Craig Thomas. So I've been doing tax policy for a long time, and I really enjoy it.
Well, this is fantastic. I love that there are so many smart women who tackle these issues because unfortunately, very often the perception of tax policy experts are, guys with glasses, noodling numbers all day long. And I think that there are lots of brilliant women who are trying to figure out how to, make our tax system better. I would hope simpler and smaller. That's my dream. But we'll get into that today. So Kimberly, I'm going to have you start off with this first discussion about tax refunds for those who are lucky or blessed enough to get them. I mean, actually, is it a blessing to get a tax refund? Is it a windfall of cash, or what should we understand about tax refunds?
Well, if you're getting a tax refund, what you need to understand is that you have given a tax or an interest-free loan to the federal government all year long.
Thanks.
So you're getting back your own money that you never needed to pay them in the first place and that you could have had in your own pocket to use during the year. So the ideal situation is you really don't want to get a refund at all. What you really should desire to be your outcome on tax day is to owe, but to owe just a little bit, because then you're not responsible for any penalties or anything like that. And you have kept your own money and not given this interest-free loan to the government.
So you're saying we shouldn't celebrate a big refund then? I mean, like the $8,000 or the $5,000 back. I mean, I don't know, Nan. It's not. It doesn't sound like a bad thing to get a big check from Uncle Sam after he's taken so much from our paycheck all year. Am I wrong?
Well, I think Kimberly already put it well. It's not a windfall. It might feel like it, but that just means that you had less to use all year, perhaps to invest, to save, or to address other priorities you might have had in your life. But if you're like me, it's still nice. It feels good. You get that dose of serotonin, but it's a lie.
Now, I do know that this year, the past couple of tax years have been really all over the place because of the different forms of aid that were given out because of the pandemic, and the expanded child tax credit is a kind of thing. I think one of those areas that will plug a little bit more. But should people be surprised at how big or little their tax refunds are because of the child tax credit? I mean, have we been hearing about this?
I know I've personally heard from people who have been very surprised by their tax bill this year.
Hmm.
The IRS used 2020 tax information to determine who was eligible and for how much. And they were trying to approximate about half of what you would be eligible for based on those numbers. And that might or might not be accurate because your tax situation certainly could have changed. And I also don't know how accurate they were just in figuring that out up front, even if the data was the same. But for example, one friend that I have, she and her husband expected to owe like $500, and instead they're owing about $5,000. So, I mean, they're magnitudes of orders of magnitude off where they expected to be or where they're used to being at this time. So a lot of people are getting hit with big surprises, is my understanding.
Wow. All right. Well, there goes that pop of a balloon for all those people who are expecting a big refund. All right, let's move a little bit into kind of just the broad tax code. And I said I would love to see a simplified tax code, Nan. Maybe do you share my optimism that one day we'll have a very simple tax code?
Despite the likelihood, it is still a goal worth pursuing. It is that is the best way to keep things fair and transparent and reduce complication, reduce the unintended consequences you have of different distortions when you're, I always think of the economy or even the tax code as like a balloon. And when you squeeze one part, you're going to get distortions in other areas. And that's true whether what you're doing is big or small, and sometimes it can be in ways that you don't anticipate. So I think simplifying the tax code is really, really critical.
Well, Isabel, I know that we had the 2017 tax cuts that were passed under President Trump's administration, and one of the goals then was to get, most people's taxes down to like a postcard. Tell us about those 2017 tax cuts. I mean, do you think that the data bears out that they actually simplified the tax code and were good for American families?
Yeah, we have a decent amount of data on how much it reduced the tax liability for American families. Virtually in every bracket, the Americans saw their tax liability drop by anywhere from 12 to 20%.
Wow.
Depending on the state. So, I mean, it did simplify taxes and it did reduce tax liability, and it reduced tax liability for middle-class Americans more than it did high-income Americans, which is also against the typical narrative run by the media. So, yeah.
Well,
but
and
there's still more work to be done, obviously.
Well, and to your point, more work to be done. I mean, I'm pretty sure that those tax cuts are set to expire in 2025, if I'm not wrong.
Yes.
So I think we've heard in the left, and you guys can jump in here, but we tend to hear very often that the 2017 tax cuts were a tax increase on middle class families, but Democrats are being a little bit misleaded. The left is being misleading because they're referring to when the tax cut expires. I mean, by show of hands, who thinks the tax cuts are not going to be extended when they after 2025? who thinks they would not be extended. Yeah, exactly. You don't think they're going to be extended, Isabel?
I hope the tax cuts will be extended, but I have learned to not be too optimistic about those kinds of things.
Okay, well, let's hope for the best. I mean, I do think that you're right. Tax cuts in 2017 were great for just about every single tax bracket and simplified the code by reducing the number of brackets that there were. So, Isabel, I'm going to stick with you on this next question about raising taxes, because we know that is the only tax strategy many people on the left refer to. And this is a big one. And I'm pretty sure Elizabeth Warren has probably tweeted this today, or she will before the day is out. But do billionaires like Warren Buffett, do they really pay lower taxes than their secretaries? Is that true?
No, definitely not. The United States has one of the most progressive tax codes in the world. We know that the wealthy in sheer amount of dollars pay significantly more. In 2018, the top 1% paid 41% of income taxes, and the top 20% paid about 90% of income taxes. But more significantly, we know that despite Democrats' claims, the wealthy also pay a higher effective tax rate. So the effective tax rate is just simply the amount you pay in income taxes divided by your income. And in these conversations, the left often tries to use the top marginal tax rate someone pays at, while excluding the fact that we have a graduated tax system and numerous deductions, including a large standard deduction thanks to Republican tax cuts. So in 2018, the bottom 50% paid an effective tax rate of about 3.4%, while the top 1% paid an effective tax rate of 25.4%. So the left also often confuses individual income taxes with business taxes. And even then, Elizabeth Warren composed this massive list of corporations whose effective tax rate is under 15%, and nearly all of them were still higher than the 3.4% that the bottom 50% pay. And the amount was in the billions for each of them. So, I mean, Warren Buffett can speak for himself and donate to the Treasury if he thinks he pays too little, but pretending this is a universal thing is just a lie.
Any of you guys want to jump in on this?
I would just second what Isabel said. That's very accurate. And it's important that we be realistic and honest about these numbers if we're going to have a real debate about the right size of our tax burden.
So thinking about that, then recently we saw that President Biden released his fiscal year 2023 budget, and not surprisingly, he instituted a new billionaires tax, which would start to tax for the first time capital gains. I won't go into the nitty gritties on that, but I'd love for someone to talk about what level is going to be the right level of taxation of the upper class to be able to pay for all of the wish lists that the left and particularly those Democratic socialists like Bernie Sanders and Representative Alexandria Ocasio-Cortez, they want. I mean, they want like $10 trillion or $6 trillion of social spending. Where are we going to get the money? Can we tax the wealthy enough to be able to fulfill all of those obligations?
Well, I can jump in here. I mean, if you seized all the wealth of every US billionaire, you'd have about $5 trillion, wow, which is $1 trillion short of the spending included in Biden's budget proposal and much too short for the proposals you just mentioned from people like AOC and Bernie Sanders. And obviously no one is proposing seizing all of the wealthy's assets, but it's a good reminder that they aren't just an endless pit of cash available for the government to fund its projects. So yeah, the inevitable part of spending trillions of dollars on ever expanding government programs is that eventually they'll have to raise taxes on low and middle income Americans. So European countries are a great example of this. Someone who makes like $47,000 in Sweden can pay a top marginal income tax rate of 55%. And those European countries still have a progressive tax code, but revenue from the rich just isn't enough to sustain the programs that they have that the left also wants here. So it will never be enough. And they will come for middle income taxpayers and even low income taxpayers when it's not.
Isabel is exactly right. And there's another point that I would just raise here, and that's that every time that the left wants to pay for another program, their dog whistle is, the high income taxpayers don't pay, quote, their fair share. But the point is that if you ask them, what is that fair share? What is that number? What does that look like? They can't answer you because the goalpost keeps moving depending on how much income or how much in taxes they want to raise and how much they want to spend. So they use that as their dog whistle, basically, to try to take advantage of class warfare and make the lower income folks think that the higher income folks somehow aren't paying as much as they should be paying. But what they should be paying is a moving target constantly. There's no actual number that they could put on that.
Well, and it's interesting. I love your point, Kimberly, because you move us into a question I had just generally about the tax base. And we can talk a little bit about, who is paying taxes. And maybe, Isabel, you might have touched on this a little bit in your remarks earlier. But is it true, and anyone can answer this, is it true that half of Americans pay no taxes at all? And when I say no taxes, we hear that, and sometimes coming from those on the right, will say, well, yeah, half of America doesn't pay taxes at all. I think that's a little disingenuous as well, because is that disingenuous? Is it true that half of Americans pay no taxes?
Well, I have thoughts on that.
Go for it.
Rick Scott, who introduced this plan of his, and one of the 128 proposals is the one tax policy in it, which is to make sure that those Americans who don't pay income taxes would pay some portion of their income to the government. I think his assertion that Americans don't pay income taxes, don't have skin in the game, is really unfortunate and misguided. And his plan to raise taxes is a gift to Democrats. Just today, the White House put out a little fact sheet on how Republicans want to increase taxes on the middle class, citing the senator's plan, despite no other elected Republican getting behind this policy. So no, all Americans pay taxes. Many pay state or local taxes, like property taxes, sales taxes, you name it. But even if we limit the conversation to federal taxes, some Americans may not pay income taxes, but they're still paying excise taxes, gas taxes, alcohol taxes, taxes on guns and ammo and airline tickets. And all Americans are affected by the federal government's tax policy anyways. I mean, workers and consumers bear the primary burden of the corporate tax and other business taxes. And I also reject the idea that Americans not paying income taxes is a bad thing. That's good. The income tax was never meant to apply to all Americans. And the GOP is the party of taking Americans off of income tax rolls. The Republican tax cuts took over 3.5 million households off the income tax rolls, and that was an awesome thing. And states across the country are also lifting their income taxes or are in the process of doing so. So I just think I don't think Republicans are actually behind this type of plan, and I think it's a really unfortunate thing that Rick Scott has given them this golden egg.
Yeah, if you live, breathe, or move in this country, you pay taxes, many of which Isabel already mentioned. But, even if you're not a property owner, if you're a renter, you're still paying property taxes through your rent. Everyone is paying all kinds of sales taxes. If you have a job with a large enough business, then you are paying Medicare taxes, other payroll taxes, Social Security, unemployment insurance. It just goes on and on. Everyone is paying into the structure of the social net and the government that we have.
I have a little bit of a different take on that. Most economists agree that the fairest and best tax system is a broad base and a low rate when you're talking about income taxes. And I tend to agree with that. And it seems that while people are paying other taxes, that's absolutely true. A lot of those are more invisible. Like, for example, Nan's point about renters paying property taxes. She's absolutely right. But a lot of renters don't realize that they're paying property taxes. So what it creates is this upward pressure on income taxes, for example, by people who aren't paying into the system under that particular model, or they're not paying income taxes. Also, if they are paying, if they're employed and they're paying employment taxes, they're a lot of times getting money back if they're at the lower end from the income tax system in the form of refundable credits like the child tax credit, the earned income credit, that kind of thing. So I think if everyone has skin in the game, then it is it's a lot easier to control where the tax rates go because everyone sees it, everyone understands it, everyone knows they're paying. And it's also a better model. However, I also agree with Isabel's point that it's unfortunate that it gives a bad talking point to the other side, and it's horrible messaging. I get that. I understand that. But from a purely economic perspective, I do think it makes more sense, and I don't think Senator Scott was wrong in that regard.
Well,
So
I will
Kimberly's point, I would
Go
just
ahead,
add
Nan.
that I think that this is where accuracy in how we talk about these things is so important, and not being facetious about different, talking points and things like that, so that we can have, again, an honest debate about where the money's coming from and what the burden should be.
Yeah. And I will say in response to Kimberly, I totally agree. And I would love a flat tax where there was definitely not going to be upward pressure on that top marginal rate. But in my mind, because we already separate tax rates in different brackets, we have a graduated tax system. Even if you make those on the lower income Americans pay more in taxes, they could still very easily advocate for a higher top marginal income tax rate because it's still not affecting them. So the fact that we've separated them in brackets, for me, the damage is already done. If we had a flat tax, I think that would definitely be true. But
well, if we really wanted people to feel the pain of taxation, if we wanted people to feel the whole price, there are people who would recommend that we not do withholding throughout the year so that people are paying, one big tax bill. And I'm agnostic on these things. I think these are all tough choices. Or same with, payroll taxes and other things that come out of our paychecks automatically. Some proposals to undo this without, everyone signing a big bill every year and sending a big check to the government that they might not have saved and planned for. Although a lot of small businesses do have to do that on a regular basis. But, some people say, well, maybe we should have a receipt that everyone gets so that you can see where your money goes and have a little more awareness of what you're paying for. Or a plan I really support, doesn't get us all the way there, but helps, is a fiscal state of the nation each year. This is a bipartisan plan where the Comptroller General would do a speech before a joint session of Congress or a joint session of the House and Senate budget committees to talk about the fiscal state of our country as a whole, to try to elevate the relationship between what we're paying and what we get for it and what we owe long term.
I could just hear Cardi B in her, I won't do her voice, but I could hear her, Nan, on Twitter or doing an Instagram live saying, I am getting bleep, bleep, bleep for my money, but I think that level of transparency is, frankly, is a minimum policy solution when it comes to just understanding what our burden is, how, and right, not just what our burden is, but what the government is delivering based on what we are giving them. So I think this is a really good discussion because it reveals that there really are trade-offs to a simple tax a simple tax plan that would just be, everybody pays the same flat rate. Well, that's going to mean that some people may be paying who weren't paying income taxes before. But then we're stuck in a system where I will be 100% honest. I don't see flat tax anytime soon. But then again, there are a lot of things I didn't see happening in my lifetime. So we'll see. But Nan, you mentioned small businesses and the fact that if you are a small business, maybe you earn 1099 income rather than W-2 income, that you are not just waiting until April 18th, or usually April 15th to file your taxes. Tell us about that.
Well, this actually kind of goes to a meme you'll see on Twitter a lot around tax day about how if the government already knows what you owe, but they make you do all this math and then they'll tell you if you're right or wrong. Well, one, that goes back to my pain issue with paying taxes. We don't want the IRS to do all the math for you and give you a form and you sign it, because that leads to less awareness of the problem. And also the IRS is not great at its job. So I would rather do the math myself. But in this area, you're asking small businesses to guess the math ahead of time on some taxes and prepay on a quarterly basis. But it also gets really complicated when it just comes to the annual income tax burden, where some small businesses just use what's called a pass-through. These are smaller S corps or partnerships where their business income is taxed much like ordinary income. But if you have a Section 199A, that gives you the option for a different type of deduction, for 40% deduction, I believe it was, or 20. I think it's 40% deduction, whatever is smaller. But even that is very, very complicated. It didn't simplify things a whole lot for small businesses. It just tried to kind of smooth things out so that there's more cohesion between how larger corporations pay taxes, how individuals pay taxes. Then you have this giant group of small businesses in the middle, and how can we try to not create a misaligned incentive that urges people to, qualify income as one or the other. And, right now it's very hard to say how successful or not this change has been, because the COVID-19 pandemic has really decimated many small businesses, and there were all kinds of incentives and grants and help that came during the COVID pandemic in response that people got. So that's another complicating factor. If I were a small business owner today, I'd probably just cry.
Well, Kimberly, you wrote recently about this issue when it comes to reporting for those who earn kind of 1099 income. And just there's been some confusion lately about whether, if you're Venmoing your friend pizza, your what you spent on the pizza you guys bought together, whether you're going to have to eventually submit IRS paperwork, or whether the IRS is snooping into our bank accounts to catch this kind of business activity. Can you talk a little bit about that and maybe debunk or clear up some of the misunderstanding about that?
Sure. In the American Recovery Plan Act that was enacted last year in March, there was a change made to the 1099K reporting. And it was actually, in my view, a positive change, because what had happened is you had your 1099, or mostly a positive change. Let me put it that way. There are some problems with it, definitely. But when you had a 1099 miscellaneous or a 1099 NEC, they're calling it now, for compensation for independent contractors.
Yeah, anything like painters, small business owners, maybe you're a translator, maybe you're a florist, but you get 1099s from whatever your clients are, correct?
Absolutely. Right. So if you were getting paid in a more traditional manner, say, check, cash, direct deposit, that kind of thing, you were getting a 1099 miscellaneous or NEC after 2020. And if you were working, say, in the gig economy, say for like an Uber, a Lyft, or a Handy, or one of those companies, and you're being paid on a third-party platform like Venmo or one of those that they're using, then the threshold for the 1099K was so much higher than the threshold required for the 1099 miscellaneous or NEC. The threshold for the NEC or miscellaneous is $600, and the threshold for the 1099K was $20,000 plus 200 transactions. So if you were, like I said, driving for Lyft or Uber, or working for Handy or something like that, you might get to the end of the tax year and get no reporting whatsoever from the company that you worked for. Even if they were collecting all of the money from your clients and turning around and paying it out to you, you still weren't getting any reporting necessarily, any required reporting, I should say, because I know, for example, Uber did give some reporting to their drivers. But it created this $19,400 gap and 200 transactions, of course, between the two reporting requirements. And the reporting then differed based solely on how you were being paid and had nothing whatsoever to do with what you were actually making. So if you were making, say, $7,000, and you were in a more traditional area, you were getting paid, like I said, cash, check, direct deposit, then you're getting the NEC or the MIS. But if you were getting paid on a third-party platform, you weren't getting that reporting unless you made $20,000 or more.
Gotcha.
So, so it created a real problem, and this big disconnect. So what they did is they harmonized the two. So both of them are $600 now. The only problem is that the reporting requirement rests with the third-party platform, not necessarily the person that you're working for. So if you, for example, go sell your car, a used car, and you sell it for a loss, but it's over $600, that could trigger reporting potentially. Now, these third-party platforms tell us that they just know, what is a business transaction versus what isn't, but I'm not sure exactly how they just know. I don't think any of us knows that. And it's also a privacy concern. If you sell your car for $700, that's nobody's business but yours. But that transaction might still get reported to the IRS regardless, and you might end up with a 1099K and an audit notice from the IRS, even though it's not a taxable transaction.
Well, and this brings up a really hot topic that, frankly, bubbled up last fall, which is IRS potentially snooping. Congress potentially giving the IRS new authority, I guess, to look into the transactions. And I guess this is what you were getting at Kimberly, but at the transactions that American regular folks were doing at the $600 or I guess what was the 20 transaction level. Isabel, you guys covered this at ATR, is that correct?
Yeah, we covered this quite a bit. What you're referencing is the fact that your bank inflows and outflows, and also your third-party payment apps, so things like Venmo and Cash App, those inflows and outflows would be reported to the IRS if you had inflows and outflows exceeding $600 or $10,000, which was the latest version of this policy. Obviously, huge privacy concerns there. The IRS is already a horrible steward of people's tax data. So we've raised a lot of concerns about this policy.
Yeah.
I want to add that this is not the only additional authority that the IRS has been seeking, in some cases for years at a time. One of the issues that I work with our friends at the Institute for Justice is about tax preparer licensing. And this is a new regime that the IRS would like to have, which would make it more expensive and harder for individuals who are already dealing with a crushing load of complexity to do their taxes. It would run out many small businesses, and it would really only benefit those big tax firms like
H&R
Block and others who have the funding to comply with this type of additional regulation and the needs for ongoing education and all kinds of other requirements that the IRS would like to have. When a lot of tax preparers, they're seasonal, they're retired accountants, and the issues about fraud around this that people are talking about are really, really overblown. And it's dismaying that both Republicans and Democrats are like, yes, let's give the IRS more power, when, as Isabel noted, they use the power that they have already in a really ineffective, often toxic and abusive way.
Yeah.
And go for it.
Sorry. And Patrice, you mentioned earlier these proposals about taxing unrealized gains. Mm-hmm. That's also another form of giving the IRS power to literally determine the value of Americans' assets, and that can definitely be abused. So,
and for, say, a celebrity, they can decide what you as a person are valued, and this can play out over months and years, and making an educated guess instead of looking at actual earnings. And instead of just guessing earning potential, I mean, we'd all be wrong. How many times has, say, a new app gone really big when it was taken public, only for us to find like, oh, no value really at the end of the day, or that wasn't a good business model. We don't want the IRS guessing those things
on a day-to-day basis. Can you guys just break down that proposal? I didn't go into depth with it, but I would just love for someone just to explain what that proposal in President Biden's new FY 2023 budget is.
So this proposal imposes a 20% minimum tax on taxpayers with combined income and assets of over $100 million, meaning this would be a tax on unrealized gains. The idea is to make sure that all of the taxpayers' income and assets, if they exceed $100 million, like I said, they would have to meet that 20% minimum. First of all, this is a direct tax that isn't apportioned, meaning it violates Article 1, Section 9 of the Constitution, or probably does. Hopefully, courts would determine that to be the case. And it, of course, decreases innovation, investment, cost jobs, economic growth. Like I said, it could be a new tool for the IRS to abuse taxpayers with. And I mean, yes, it only hits around 700 taxpayers, which was the White House's estimate. But when Congress enacted the alternative minimum tax, for example, in 1969, it only applied to 155 people. And by 2010, 20% of filers pay the AMT. So, I mean, this type of tax could easily spread to more Americans over time. And then we have a whole number of Americans paying taxes on money that isn't even theirs yet. So,
yeah. I mean, thank you for explaining that really well. I think fundamentally, and Nan, you touched on it just a moment ago, it changes how we look at taxation from, taxing our income, to taxing the value of our property, at any given moment. And if this were to fall down the income scale, someone could be taxed on jewelry or their baseball playing cards, if people still trade those things these days, or whatever, they have.
They're beanie babies.
Beanie Babies, yes. Imagine it being taxed arbitrarily at its highest value level, and you still own it. You haven't sold it. That's really a fundamental change in how we tax and how we treat people's property in this country. That's pretty scary, in my opinion. I would, in the last few moments we have here, would love just to talk about the IRS. It is, I don't even know if it ranks higher or on par with Congress in terms of approval ratings. And we know Congress approval ratings is what, 10% maybe at this point. But why is it that the IRS is so woeful in just its customer service, its ability to deliver customer service to regular people? I actually have a blog out this morning on IWF's website that just says, planning on calling the IRS today, forget it. Because apparently they're only answering about 11% of phone calls. And so I'm very sure there are plenty of people who have not filed their taxes today yet and are like, I need to call the IRS because the website's not working. I don't know. I got a lot of questions, and they're just crossing their fingers and hoping that they are one of the 1 out of 10 or 1 out of 9 calls that actually gets answered. Why is the IRS in such a situation like this? Anyone can answer this, because I don't know what the answer is.
This was a big deal last summer when people were talking about the tax gap. But at the time, a lot of that was around the things that we just mentioned. Let's give the IRS these new authorities, these new powers to capture more cash, to audit people more aggressively. And while people were fighting about that, I think what was ignored, and what I think we can find bipartisan agreement on, is that the IRS is really under-resourced when it comes to customer service, when it comes to the technology systems they're using. And while I, as a budget person, really hesitate to say spend more on anything, this is an area where I do think it's pure good governance to spend what it costs to get these systems up to date and to improve customer service, because this is the one area of government where everyone is going to interact with the federal government, and it should be able to respond in a timely and accurate manner. Accurate, going back to the need for tax simplification, because 2 different tax agents could answer the same question 2 different ways, and you have to just guess what you hope the right answer is, but they will come down on you if you guessed wrong. But simplification helps avoid that kind of confusion as well. But I do think it's worth the investment to give them the tools they need to quickly and reliably take care of your returns and your questions and this important stream of revenue for our basic governmental needs.
I'd like to jump in on this one too. There's one thing that the way our bureaucracy is set up is it's wrong in this area, because they make a direct correlation between money that is spent on compliance with the IRS and the amount that's collected from the taxpayer and accuracy and that kind of thing. But what they're missing is that there's also a direct correlation between the customer service and accuracy and collection also. We have a voluntary system, as was touched on earlier. We're not in the UK where Her Majesty's government sends you a postcard and tells you how much you owe. The taxpayer has to understand how to fill out their tax form, how to report their income, and how to make sure, and this gets to the reporting issue we were talking about earlier. If you're not keeping good records, if you're not understanding how you're supposed to comply, then you're not going to be complying well or accurately. So to beef up that customer service end, we need to have better recognition within the government and the budgeting system as to how that impacts the accuracy of the filings, people's understanding of what they need to pay. And most people are not trying to not pay their taxes. Yeah. They just find it frustrating, and they find that it's difficult, and they don't understand what they're supposed to do. So if you help them up front on the customer service side, and you answer more of these phone calls, and you help people and you walk them through it, you're going to reduce the tax gap because more people are going to understand how to comply and be more accurate in doing so.
If some of this additional funding that the IRS needs was linked to, say, some enhanced taxpayer protections, such as not assuming that every mistake is an attempt to hide funds and subvert the law and not an honest mistake, or better restrictions on asset forfeiture and things like that, then I think that that would be a really good deal. And it's a conversation that we should be having. This technology problem is something that extends to many areas of government. And while I don't want a big government, I do want the small one to be effective and painless.
Oh, go ahead, Isabel.
I will agree with Nan that if there's any additional IRS funding, then it has to be connected to protections for taxpayers. But I mean, ATR, we don't really support any additional funding going to the IRS, and that's because we've had decades of the IRS trying to fix these very basic problems, and it seems like regardless of their funding level, those still exist. So ATR, a few weeks ago, we put out a blog post called 40 Years of Failure. The IRS is unable to fix its computer system, and it goes through, since 1982, this journey the IRS has gone on to improve its IT, and it shows that regardless of its funding level and the resources it's given, it still hasn't been able to get this across the finish line. So, I mean, in my opinion, a lot of this is attributable to the incompetence at the IRS rather than a funding level.
Well, you guys ended on a really strong note here. Your wishes, your words to Congress's ears, hopefully, and leadership of the IRS, because I do think that, I don't think most people want to be tax cheats or are purposefully trying to hide their income. I think people are relatively compliant, especially if they know what they're getting for their money. But it's frustrating waiting 23 minutes or more, as I have, on the line, just hoping to hear from someone. Well, in any case, ladies, you have been fantastic. You have provided so much clarity and information, debunked some common misperceptions that I know people will see on Twitter today. And I thank you guys for joining us today for today's policy chat.
Thank you for having us.
Thank you for having us.
Terrific. All right. Well, thanks to our audience for watching today. We hope this chat was informative and it was helpful. And we would love to continue the conversation with you or my colleagues on our Independent Women's Network. This is our members only community, IWN. Now, as a member of IWN, you have access to more conversation starters like Tax Day. Raise your hand if you've already submitted your taxes, or drop your head if you have not submitted them yet. You've still got a little bit of time. But we also have a ton of regular programming and resources giving you more myth-busting tools like today. So visit IW Network, that is iwnetwork.com, to activate your pass or select another membership level that is right for you. And again, don't forget to sign up for our newsletter, The Pointer. This is where we have all of our news and alerts on policy and analysis from the Independent Women's Center's Center for Economic Opportunity. So visit iwf.org/CEO. So until next time, folks, this is Patrice, and it has been a pleasure to spend my tax day afternoon with you.